Hello, this is Cryptolyze. I hope you are well this Friday, 17 November 2023. It is with pleasure that we meet today to talk crypto, to talk BTC, to talk news, and to see a little bit of what is happening on the different markets. And it starts right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training worth 400 euros, which allows you to learn blockchain, crypto, investment, analysis technique, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. We start the news with Binance, in which we learned that the official who manages counter-terrorism in the exchange after 2 years has left. It's still a certain number of departures that we're starting to have. Afterwards, this is explained quite easily in view of the tensions that there are in the USA on the financing of terrorist cells through cryptos, something which is complicated to prove, but in which it is really a subject of electoral tension. We don't forget that we are getting closer to 2024 in the USA. So obviously the elections will weigh heavily in the discussions, in the representations, because they are really representations. They are shows that we can have, whether it is founded or not, it doesn't matter. The goal is the election behind it, so we will be a little careful. But nevertheless, it still remains a new big start for Binance. After already a whole series of departures around regulations, around counterterrorism, we are starting to ask ourselves a few questions. We will have to monitor all of that. Don't forget, we always remain in the not your key, not your coin perspective. We don't think that Binance will have problems. But nevertheless, we didn't think that FTX was going to have problems either. So never let more than necessary on centralized exchanges. Really, never forget it. Then at the crypto level, we still have AVE Companies, which is rebranding itself as Navara. So very interesting, AVE Companies is not just the AVE site, it's lots of other things. It's Lens Protocol, for example. It's the GHO stablecoin. And they have several other little things like the Sonar brand and other small brands and companies who are buying little by little. And in fact, they decided to rebrand themselves as Avara. And what is rather positive, that means that they are really developing a complete ecosystem. And this is confirmed by the latest acquisition they had, which is a startup company, which is actually based in Los Angeles and which is actually behind a wallet, okay? So I think that we are really creating a complete ecosystem in which we will have a wallet, we will have stable coins that work well. See, next to the whole notion of decentralized social network through Lens Protocol. We're starting to really see the patterns of a great Web3 application that could arrive through Avara, and that will be something to follow in the medium to long term. I think we might have some news soon. So, a little macro thing that was monitored anyway, which is really the meeting and the resumption of the discussion between the USA and China, with the meeting between Biden and Xi. As a result, we find ourselves in a discussion which was, after all, rather coherent, where we really had information on their point of view. What I like is that, as a result, we still have, when we go down a little, 3 photos which are very representative. We have the best friends in the world, and someone who asks questions. Note that at the end of the discussion, nevertheless, Biden said that his Chinese counterpart was still a big dictator. Well, I think that we are still very, very far from the notion of good understanding, but in any case, at least we have a return to dialogue, which can be positive in particular on the frictions around Taiwan and the position of China in relation to what is happening, whether in the Middle East or in Europe. In terms of the calendar, today we're not going to have much. So yes, we have the annual CPI in Europe, which is going to fall, but hey, all in all, there's not much risk of move. We should go below the 3% mark, which would be positive. Even though the forecast is enormous, we go from 4, 3 to 2, 9 to see if we manage to hold it. It could be a good recovery for the euro in which we could have an impact at the level of the DXY, which is the representation of there in relation to the basket of currencies. And we do not forget that in this basket of currencies, there is still more than 50%, we know the euro. Another little thing that is interesting to see is that we are starting to have signals on the evaluation of the probability of the implementation of the Fed pivot. This implies that we are trying to determine when the Fed will begin its reduction in key rates to reduce pressure on the economy. On this, we are told about the month of March. But what is interesting to see is that we look at the level of the CME, which is the representation of the statistics currently for institutional on the moment of the passage on, in fact, the pivot point. We have, in fact, March where we begin to have a shift, but it remains relatively weak. That is to say that we still have 67%, which considers that we will stay with the current state. On the other hand, it decreases greatly, very, very significantly from May-June. We see that we have a relatively significant decrease. 25, we are starting to consider that we still have a decrease. We would go below 5 in the around May-June to arrive at the end of the year, ideally around 4. So we really have a decline starting to begin, or at least an anticipation of declines. And what is interesting, and we don't have the data, unfortunately, finally I found a way to do it, is the representation of these rates here, these percentages compared to last year. I remember, even very, very remember, I should find in a video that we had approximately the same rates over the same period, but the year former. So we always take a little step back from what's happening. Yes, it is not because we have a drop in inflation that we are going to have a break in rates, unless we have a sufficiently strong event which forces the Fed to act, and no one wants that. Because that implies that the soft landing is very, very far away, and that we are really in a hard landing and in which it is going to hurt very, very badly, so we don't want that scenario. But I think that, seems coherent. But don't we let ourselves be lured by something we've already seen/known? In any case, what is certain is that the S&P 500 market has a delaying reaction following its big acceleration in which we are working the 4,500 above the 4,500. We are closing above. We will reach this day to see the weekly close that we will have, and we will certainly discuss it tomorrow. But in any case, what is certain is that here on the RSI, we really started to rise again with a really nice break that we had. A nice break, yes, but which still gives us a big bearish divergence in which we have here an RSI which is higher than the previous one while the top is not done. So that implies that we would have to go back to something with an acceleration, a break in this zone. So yes, it is feasible, but except that when we begin to understand a little bit the movement of the S&P 500, and we look at the NASDAQ which is found here, what is interesting to see is that our friend NASDAQ here is going to be a little bit different because NASDAQ itself broke its previous tops. So it broke this one. Okay, this one too. And what are we doing? To break here, the next one. So here we are potentially in a new ATH at the NASDAQ level. And that implies that we really have the S&P 500, which is carried by tech stocks, and really by tech stocks. That also means that it is carried by very few companies. We do not forget that in the NASDAQ, the performances are really carried out by a core company. And this is really the case in particular. We are talking a lot about Microsoft at the moment in which we are doing ATH on ATH on ATH, but it is not the only one. And with this dynamic that is growing, are we going to have at some point a breathing space at the level of the NASDAQ for precisely when we make an acceleration like that? We have to have a phase of lateralization of decline. And at that moment, what will be the magnitude of the decline on S&P 500? That is really the question that we will have to ask ourselves. Oil. We have a good rupture, which is in the process of making big changes again yesterday. Quite surprising with the rupture of 75, and here we are slowly moving towards the 70. I even think that we could go and retest the part here of the 67-66. With a channel bottom that could be validated. So here we really have, I think, the position of a high channel, low channel, medium channel in which we risk oscillating. So it oscillates between 93 and 65. So here we could really have a very big channel, much bigger than the one I originally thought. Awaiting validation, of course, in the coming weeks. Small point to also validate in the coming weeks, this will be the consolidation that is being carried out of the difference between the two rates. Therefore, the rates of the U.S. Treasury bond 2 years and 10 years, very important because we are going to have a discussion on the U.S. budget which risks having an impact to see if we can get back to the surrounding areas above the 10% and to validate here a nice break-off structure. It could be really good because right now we haven't broken this low, so it feels like we are holding it. If we hold it, then there is a high probability of breaking upwards, and that is what we want, in any case, to return above zero, to return to a classic curve, even if we go through a transitional phase of inflation. In terms of the dollar, we see that we have very strong pressure on the weekly close. We will wait, see if we close below. Of the key level that we have, if we maintain this level, it is rather positive. If we break below, it implies that the dollar index will go much lower and retest the 102. The American market has a VIX, which is sinking. This implies that we have a pricing of the American market which is being carried out and a reduction in tensions. Therefore, which is rather positive and which is rather consistent with what we see at the level of the S&P 500 and the lateralization. So we have a consistency between the two which is rather reassuring in any case in the long term. BTC, we see that we have again swallowed yesterday's candle. So yesterday we had a big red candle. Yesterday we found ourselves with a relatively flat candle because we are in weekly, and here we find ourselves again on a bearish movement, but which is less strong than the previous one. And yes, when we look, we have not broken the top, and we have not broken the lot. You know that. You know this typology of pattern in which we will find ourselves in a form of compression, which here represents something classic when we are in the possibility of a week-off distribution. We don't forget BC, Arkansas, ST. We have the SAO, which went to look for this area. We have the UT, the UTAD. As long as we do not break the SAO, it is not validated, and therefore, in all cases, we do not have a break-off structure. We don't forget that we had a small break-off structure, but we did not validate with the liquidity gain of this area. Same here, this batch which was carried out did not fetch this one, so we did not validate. Second point in which we can have this compression zone is that we have market uncertainty on the positioning of the price of BTC and the consolidation which is taking place, in particular always on this bullish momentum which is present but which is weakening. I remind you, here we are in 4 hours, that we are still in this representation. I am just going to zoom out a little more to show you that we are indeed in this representation that we have already known, which is rather a pattern of this style, in which we have a bearish divergence which is very present, which is present in daily and in 4 hours, in which we have an acceleration phase, a rupture phase, yet another times acceleration, breathing, re-acceleration. Are we in this breathing here that we were able to have, or are we simply in this work here upstream before having yet another upward acceleration, bearish breakout, re-acceleration, bullish, and so on? On this, the temporality is always complicated, but nevertheless we see two things. One, clearly we see a decrease in the bullish momentum. That is to say that the RSI is indeed falling, so that implies that we have indeed here a difficulty in being able to progress stronger, in which we lack liquidity. We clearly lack open interest as a reminder. Here we cannot manage to get back above it. We continue to sink. So that means that we has difficulty raising capital, perpetually to be able to finance. Besides, in terms of liquidity, there is no one who is repositioning themselves. We can clearly see that the movements currently, we had a short squeeze, which was quite strong, but with low liquidity, and that each time we have less and less short-term liquidity being positioned. We can clearly see the evolution. Here we had more and more people who were positioning themselves, in particular in this area, where we see that we began very, very quickly to accumulate liquidity there. We have a lot more difficulty being able to do it, and this is also validated at the level of CVDs, in which we have a market which is less and less aggressive, and which is rather classic when we arrive in areas like that with periods where we no longer have impulsivity, no more momentum. We will see CVDs which collapse, and therefore there we have a price which continues to push, so it does not necessarily land but which continues to rise in terms of price with CVDs that sink. So that means that we have a real shrinking of the market and a shrinking of buyers who are getting tired. So we have a market that is less and less aggressive, while precisely we have a price that continues to grow, and that we will have to do. Be careful. We are going to ask ourselves the question of where we stand in terms of the total. Total 3. We are, yes, in this rather classic resistance zone. We will wait to have validation and a close above to consolidate, to really have a big bullish signal. However, what is interesting is when we compare the total, therefore, which represents the totality of the cryptos versus the total 3, so it is minus BTC minus Ethereum, we see that the candle is still very different. It is to say that we have a candle which is much more compressed, in which we have implied downward performances which are less significant than BTC. Something which is quite rare. That is to say that usually, when we see the total 3, which represents all the altcoins, when we have a BTC which falls, we are supposed to have altcoins which fall much more strong, and therefore we are supposed to have a downward pressure at least identical, if not more than that of the total. Here, that's not the case at all, and that's really important to note. And when we start to look a little at the dominance, we see in fact that there we have candle dominance. Classic of BTC, where we have a decline on the 52%, which is the breakout zone that we had, which is rather positive to show a further acceleration of BTC if we ever stay on this fence and that we does a pullback well. On the other hand, what is important to see is that we have here a drop in the real divergence at the level of Ethereum. So this implies that we do not have a positioning of Ethereum in relation to the entire market. In any case, there are less and less attractions at the level of Ethereum. On the other hand, on all cryptos, finally altcoins, from which we subtract USDC, USDT, and DAI, therefore the main stablecoins, we can clearly see that we have an influx, so that implies that we are currently in good shape. In a liquidity transit, as I explained to you in terms of altcoins, yes, but we are not in an alt season for several reasons. That is to say that the alt season normally, we are supposed to have Ethereum, which actually accompanies altcoins. So on that you will tell me, yes, that's the past. I agree with you. There are a lot of things that have changed. Ethereum, I made you a video of elsewhere yesterday above, went from proof of work to proof of stake, perhaps. Also passed in terms of representation from an altcoin to something else. And perhaps its status has changed. But nevertheless, when we are in an alt season, we are supposed to have accelerations which are much stronger, and above all behind, to have a consolidation of the price at the level of BTC and not a withdrawal. I remember a comment I had maybe a month and a half ago, which told me it's impossible to see BTC sinking and behind the altcoins growing. I want to tell you, in fact, what we see here is exactly that. That is to say that we have declines in BTC which are taking place, and alongside that we have altcoins which are growing much stronger than BTC, and this is something which is unprecedented. We very rarely, or almost none, if you have, moreover, a notion of fractality in relation to that, don't hesitate to comment on it. It interests me, I will analyze it, because I haven't found one, at least as it stands, to have this diagram there, where we have a BTC which is unable to grow, therefore which, or even retraces, and next to the altcoins which completely absorb the liquidity, which continue to grow, which in fact maintain their level, while we have a BTC that does not hold. Tell me what you think in the comments. And if you ever like this video, don't forget to leave me a little like. It always makes me very happy, and above all, it supports the channel. And we meet at 13:30 to talk about TRX, Tron's crypto, and it's at 13:30.